Why is crypto so down? There an answer to this? Yes, there is. Our partners at StormRake and Bisher Khudeira are here to help guide us, to help tell us are the narratives that matter and the noise that you can ignore. Bisher, welcome to the show.
Thank you for having me on, my dear friend. What a epic introduction. There is a lot to unpack there. Where would you like me to start? Where would you like me to thread the needle on this one? Because if we get this right, we can save the people countless hours of heartache and lost funds. Let's get into it.
Okay, let's start with gold. So supposedly the dollar's going up forever. Our deficit's gone. Everything's wonderful and no one needs gold or Bitcoin. I know. Tell us what you do in gold. Tell us what you think about it and what your clients are saying. Go gold, then Bitcoin.
Starting off with the Big Mac Daddy, the OG, people call Bitcoin digital gold. I call gold physical Bitcoin, right? And so what a lot of people don't realize is that my background was, I was originally a gold bug, right? I was an old school FX broker. I was always very bullish on gold from a time when it was about $1,000 an ounce. I always recognized the inability of fiat currencies to hold value, even though I was an FX broker, but that wasn't so much building a use case or value in fiat currencies. It was just more so explaining, okay, a client is doing a lot of volume and a lot of trading in the US. They want to hedge their USD exposure, but they're an Aussie exporter. Those are the things that I used to do. But I recognize this, dear sir, $39.3 trillion in American national debt. In America alone, your interest expense is $1.2 trillion a year. In the next 6 years, it's forecasted to be about $5.5 trillion, which exceeds your tax receipts. It exceeds your tax revenues. Back home here in Australia, where I'm calling from the Great Socialist Republic of Australia, we are holding $1 trillion in national debt and a budget deficit that is ballooning by about $20 billion a year. The Americans obviously have a much stronger balance sheet in the fact that you have a lot more financial assets, better infrastructure, a much stronger economy, a much larger economy. Like the GDP of California is greater than that of Australia, right? So we got to be able to compare apples with apples. But if we're focusing on the American issue and everybody's now bidding US dollar, and nothing ceases to amaze me quite like the human ability to extrapolate. When oil was over $100 a barrel, people were calling for 200 and it's never going to come back down again. Oil is now the new meta. It's the new trade. It's liquid gold. Oil, as per my last check, is currently trading at 72K Brent and West Texas is trading at 69.20. Everybody was calling for $200 oil, 150. That's it. Inflation's going to rip. Inflation expectations rip through to the upside. And now all of a sudden, it's no longer, it's nearly halved. And now all of a sudden, Kevin Warsh comes into the Fed chair position and jawbones the markets. We're going to have to raise rates. We may have to raise rates 3 times this year, right? And now interest rate expectations have shot through the roof. And so people are now selling assets that are non-yielding because they think interest rates are going to rise and they're going to get a better rate of return on their US dollar position or their bond positions, which is why yields came down significantly overnight. Ladies and gentlemen, let me help you wake up and smell the roses. Let's wake up and smell the roses. $39 trillion in debt, $1.2 trillion a year in interest expense, $2 trillion a year budget deficit, expected to increase to $4 trillion by the end of President Trump's term. Are you guys serious? Are you guys serious? An interest rate, even if there was to be 2 or 3, you're now extrapolating at the rate of interest rates are going to jump above that inflation. It's impossible. It would bankrupt the US government. It would make the US government insolvent, right? They're having to pay $1.2 trillion a year in interest at current rates. Every time you move the basis rate, the cash rate, by 25 basis points, you add hundreds of billions of dollars worth of interest on the overall debt load. That it's not feasible, guys. It's not feasible to anticipate that a new Fed chair comes in and that they're all of a sudden going to change the trajectory of 50 years of American policy and debt expansion, right? You just have to stay the course. So answering your question on gold, yes, gold has lost its shine. Yes, it's lost its luster. But for anybody who's worth their weight as a genuine investor, recognizes that this opportunity in gold, in Bitcoin, asymmetry has never been stronger. Now, people think, why am I as a Bitcoiner talking about gold or trying to spruik gold or pump up gold? We have to understand that the success of gold trickles down to our market as well. Gold is a $20 trillion market, $25 trillion market at current prices, right? Was almost a $30 trillion, $35 trillion market at peak all-time highs, right? If gold is to continue to succeed and Bitcoin was to return to the original Bitcoin to gold ratio that it was trading at only just 8 months ago, that would denote a spot price of Bitcoin at 250,000 US per Bitcoin. So for me, the way I see it is that the debasement trade isn't going anywhere. It certainly isn't. But people's propensity for extrapolation will be the death of them. People were calling for oil $200, for silver $200 an ounce, Bitcoin 200K. Why? Because we were in an uptrend. And now we're in a downtrend and people are calling for 3K gold, 3K Bitcoin, silver at 40, US dollar at 160 at 110, 115. Guys, come on. Like, you cannot become a serious, legitimate investor if you're continuously just selling at lows and buying highs and extrapolating that the current trend will be the existing trend forever. It's just not sustainable and sound investments, in my humble opinion.
Right. It's amazing how they see the price action and then they have to wrap somehow a narrative around it. And that's how people get really confused. Speaking of confused, have you had to defend crypto as an asset class? No, there's Bitcoin. Crypto as an asset class has lost half of its value. I know stock trading, like tokenized stocks, is a huge thing. I'm not sure if you're doing any of that. Have you had to defend crypto and Bitcoin as an asset class in general? Or where do you see crypto sitting, like, say, versus equities and commodities?
I've been having to defend this asset class for the last 10 years. I've been brokering in Bitcoin for 7 years now, Bitcoin and digital assets. And look, to be fair with you, there are times, and this is more of a comment on our overall industry. You guys don't make it easy for me to defend you, right? We trot out the ICO scams, we trot out NFT scams, we trot out the meme coin mania. Then we have Saylor and his yield Ponzi's being trotted out. Then we have unbelievable amounts of fraud thanks to SBF and Crew, and Three Arrows Capital collapses with $8 billion. We trot out a dollar stablecoin Ponzi known as Terra Luna. You guys don't make it easy to defend. I'll tell you that much. But from a first principles perspective, there are several mega trends in which I, as an investor, I'm particularly bullish on. I'm bullish on cryptographic networks. I'm bullish on tokenization. I'm bullish on AI. And I'm bullish on a sound money alternative that is not issued by central banks or governments or some centralized issuer. So that is expressed in a number of different ways. The AI trade is going to be extremely successful, but it's going to have a period similar to the dot-com era where there was a massive bubble that when that bubble crashes, there will be genuine, legitimate businesses trading at extremely depressed valuations that I think are worth buying because they are going to be the infrastructure of the new digital economy. But sometimes, and this what is explained in it, it's the Gartner hype cycle. It's a fantastic way to be able to look at any mania, any new technology. And I've applied this framework to looking at canals in the 1800s, railways in the 1900s, oil and automotives in the early 1920s and 30s. Then we went into the Nifty 50 in the 50s and 60s. Then we went into the Japanese stock market bubble. Then we went into the dot-com bubble. Everything fell into the Gartner hype cycle where a new technology comes to the forefront. This new technology brings in a wave of capital. There is this peak of inflated expectations. AI is going to decimate white collar work. Everything's going to be doom and gloom. It's AI or bust, and everything is AI. You have a random company that sells burritos and hot dogs, call themselves Burritos AI, and they jump 3-4x overnight. That's not sustainable, guys. And so what ends up happening is that there are investors who come in, they get farmed for exit liquidity. You get the SpaceX IPO, the largest IPO in history, with a 5% float. And then it literally creates a Cybertruck on the charts. And everybody's like trying to figure out what's going on, what's happened, why am I getting dumped on? Because 95% of the issued shares haven't even hit the market yet. They're stuck in vesting schedules on insiders who are going to dump on your head the moment that you hit the bid or local brokerage account. So for me, I come at it from a first principles perspective. I am not needing to defend Bitcoin. I am not needing to defend crypto because it is going to be the major set of financial rails in which our digital economy runs on. There's no ifs or buts about it. It's a matter of when and not if. And so my perspective is very simple. I don't need to defend the technology that is going to become the next set of rails. What we have to do is ensure our clients are invested in assets that are able to best take advantage of this mega trend that I believe will continue on for the next 20, 30, 40, 50 years. So for example, if I put people into pets.com in the early 2000s and they had their entire capital base destroyed, went to zero, see you later, good night. Whereas if it was put into what is now considered the blue chips or considered the most successful companies on earth, your Amazon, your Apples, your Microsoft, your Google at the time had been absolutely smashed. Now, even if you bought it at the peak, pre-IPO, pre-bubble being burst, you still have come out like many multiples ahead. So my argument and my conversation with people who are disgruntled or discrediting digital assets, these assets and these rails work regardless of whatever price they trade at. Bitcoin could go to $10,000 tomorrow, not that I'm expecting that to happen, and the Bitcoin network would still operate. Ethereum, which has been completely kicked in the teeth, could go to $100 and the network would still work and process billions of dollars worth of stablecoin volume that it's still currently doing today. So it's great to understand that technology can work without the price going up, but you have to separate the network from the token price. And when you do that, you start to recognize that the adoption trends are increasing. The infrastructure build out is becoming bigger and better. And then there's always this slope that people will go through after a crash, which is known as the slope of enlightenment. When we come through into the recovery where price matches expectations. So expectations are currently in the ground, in the gutter when it comes to Bitcoin and digital assets. But as Bitcoin and digital assets recover, as they go to match their current market value with regards to the adoption trends, with regards to the infrastructure build-outs that we're seeing, and the massive amounts of tokenization that's going on with regards to the legacy players, this makes me bullish. And I don't need to defend it because eventually you won't even realize it, but you'll go to buy Apple, you'll go to buy Nvidia, you'll go to buy Micron, and it's going to be settled on blockchain rails. And we'll see if that value accrues to the token, but that doesn't change much for me. And at the end of the day, I've been wrong before and I'm happy to be wrong again, but I put my money where my mouth is. And that's why I'm bidding Bitcoin at these levels.
Okay. Well, from experience, sometimes you have to get laughed at before they tell you you're a genius in 12 months. So I'm going to bet with you. People out there should bet with StormRake because there's Bisher and then there's a whole bunch of, I don't know, let's call them little Bishers. StormRake, they got a lot of good research. So you should definitely check that out in the link down below. The Fed, Kevin Warsh. First story was he wanted to be like Alan Greenspan, which was see technology improving, see technology hold inflation down. And now all of a sudden he's become some talk after saying, I don't know, things that were neutral. I've seen you online talking about who is Kevin Warsh and how does it connect to Bitcoin in your mind?
It's a great question. Kevin Warsh has been on record saying if you're under 40, then Bitcoin is your new gold. Now, let's separate the quotes from the man and understand what his mission is. If I was selected as a Trump insider to be the new Fed chair, I would do everything in my power to strengthen the living daylights out of the US dollar before I cut the legs out of it. Because when do you go about the biggest currency print of the ages is just before you've just told the entire world that you're going to strengthen the living daylights out of it. That's the best time to do it because then you suck in the most amount of capital. You've got buyers of your bonds, you have a strong bid on the US dollar, and then you've got a lot of exit liquidity. Now, this is something that I've been talking about a lot with investors. The lineup of lemmings that went into the SpaceX IPO to become Elon Musk and crew's exit liquidity was beyond me. I have no idea why he would do that, right? But now I get to understand it because Kevin Warsh is doing the exact same thing with the US dollar. You are literally lining up to be the US dollar and the bondholder exit liquidity. Congratulations, you've played yourself. Banks are severely underwater on their balance sheet with regards to their bond purchases, especially during the COVID era bond purchases where they went out and bought them at close to zero and then the rates started to skyrocket on them. Now their impairment on their bond purchases is significant, running in the hundreds of billions of dollars. What do? You have to try to jawbone the market into getting excited about bonds. We're all of a sudden we're hawks, we're US dollar maxis. We're all gonna buy US dollars. Come on, guys, yields are gonna come down. Buy your bonds. That is the perfect time to then dump it all on their heads. The best time to dump 95% of your SpaceX shares is when you've got a line of lemmings who are believing you're going to take them to Mars. That's when you dump it on their heads. Right? When you're looking for exit liquidity on your silver position, you dump it, you pump it over $100, and then you dump a bunch of paper silver on their heads. Take it to $60 now, trading at 57. Right? You have to understand that the financial elite are not doing this in your interest, ladies and gentlemen, right? This is really what about, and it's a really tough conversation. Now, it's not to say that there's like this evil man behind the screen going, I'm going to manipulate the markets and do all that stuff, right? It's about understanding incentives. If you are about to weaken the living daylights out of your US dollar and go on one of the most biggest prints known to mankind, and shout out Lawrence Leopold, the big print. And if you're about to go out onto the big print, you want to do so from a position of strength. The debasement trade got very hot for 2 years. Everybody was expecting lower rates, a big print, yields to be crunched to zero, and a massive boatload of currency debasement. The markets, whilst it did give a lot of people a nice hit, Bitcoin went from 15,000 to 126,000, gold went from 2,000 to 5,600, silver went from $20 up to $120. There was a lot of winners of the debasement trade. Now, you can't just expect that to go in perpetuity. I believe that this is a simple mid-cycle correction. Kevin Warsh coming out and trying to spook the living daylights out of the market to strengthen the US dollar is what I would be doing if I was the elected Fed chairman, in order to go out and dump a bunch of US dollars on people's heads. That's what I would do.
That's really an unbelievable and actually edgy take, because I think people know now that SpaceX, Anthropic, OpenAI, they're looking to dump on somebody. I think that's the only reason NASDAQ's been held up. But don't think anyone has talked about Kevin Warsh dumping the dollar on you. It's actually really interesting that Besant, the Treasury Secretary, was just on the news talking about that they invaded Iran for the purposes of getting them back on the dollar system. So they attacked them. This is how I'm processing it. They attacked them to eventually lose and then remove the sanctions and bring them back into the dollar sphere. Does that sound like a country whose currency is in a good position? No. So what I'm saying is they're agreeing with you on the tape. They're saying the quiet part out loud. Hey, we need someone to dump our dollars on. And as you said, and as you also noted, everyone's lining up, and people in crypto, amazingly, land of the cyberpunks, they're actually buying in to this story and nothing else. Crypto is actually starting to experience revulsion. So let's end with this. You've got to have people who are depressed. You've got to have clients that are depressed. Are you seeing that? Would assume so. I know you've given us the analysis. Have you had to give them a pep talk? What about your brokers, right? This is a tough environment. Like, what does a leader say to clients and employees in this type of crypto bear market where they're calling for 45K?
Well, we already had that conversation in early February. So February 6th, we tagged 60K, about 59,800 for the first time in almost 2 years on the back of a massive liquidation cascade. You got to keep in mind, we opened the year at 88K. We had a bit of a pop to 97, and then it was just pretty much a power slide to the downside, which got us back to 60,000. So at that time, there was pep talk. At that time, I was talking people off ledges. At that time, it was just fire and brimstone and getting the guys on the phones here going, it's a fire sale, guys. Get them in the phone, buy, and just help them hold the line. That was the conversation back then. But since we've had from February till now, June, almost 6 months of trading data, and we've been in this pronounced range between 60K and 75K all year long. Even though some people have some expectations that we might get to 45, 50K, people are actually bullish, right? Again, I want to be really clear that in February, that was the exact opposite. Genuinely, we just came off 126 in October. So it was only just in recent memory, 4 or 5 months ago, we were trading at almost double, and then we had halved in less than 6 months. At that time, the pep talks were happening. The fear was palpable. Whilst you might be looking at the fear and greed index and seeing it make all-time record lows, at least our clients, we've had the opportunity and privilege of nursing them through this bear market since February and helping them have a plan in place. And there hasn't been a single investor that is disgruntled, unhappy, upset, because those who already wanted to sell have sold months ago, and those who wanted to buy are now buying. And so I haven't really got to deal with this like long line of people who are just angry as all hell, upset, scared, and fearful because that conversation was had in February. And anybody who was going to sell had already sold anywhere between October and in February when it was just an absolute mess, an absolute dog's breakfast. The last 5 months from February till now has been actually quite positive and constructive. We've had good little bit of inflows. I'm not saying we've had massive volumes. We haven't had lines out of the door, people wanting to buy Bitcoin at 60K, 65K. That would be a misrepresentation. But the conversations have been a lot more productive because any buyer that is now here really wants to buy the asset. And the marginal seller is already gone. What we're dealing with is forced liquidations. We're dealing with the last set of capitulation on the time horizon. It's not really a doom and gloom chat. That did happen a few months ago, but more lately it's just been maybe I'll buy 57, maybe I'll buy 55, but it hasn't been I'm not buying, I'm really upset. It's all good stuff right now.
Okay, ladies and gentlemen, you have just received a tutorial on how to be smart money, how to think like smart money, how to think like a hedge fund that builds wealth by buying in times of despair. Trade with StormRake. Bisher, thanks for showing up. Thanks for being with us. Ladies and gentlemen, we will see you next time.